Hey everyone. It's been a minute. Glad to be back. Um, it's so funny that, 2020, it's like every month it's something new. It's just another disaster, another crash. Well, my wife showed me a meme as we're driving that was this lady just going hard on a jet ski, right? And the meme was like me going in to see what hell September gonna bring, right? Well, it just so happens that basically on what day 2 or 3 or whatever, the stock market crashed. So there's that. I lost a lot of money. But the thing is my last video that I uploaded or podcast, if you're over there, uh, was called Stock Market Basics, and literally I just explained how like you can expect in any given year the stock market to be a little bit inflated and to have like up to a 10% correction at any time, like any time in any given year. It'll kind of get out of whack, and then it'll drop a significant amount to sort of correct. Sometimes it'll go too far and we'll bounce right back up to a certain level, but it's pretty typical to have a large crash over a few days. Now, there was one day that was unusually bad. I think the S&P 500 fell close to 5%, which is not typical. But over 2 or 3 days, we lost several percent. I'm not sure if it was quite 10. My personal investments were closer to that because I was heavily invested in like tech stocks and stuff, which happens to be the industry that's been going crazy over the last 6 months and has sort of become inflated. Now, why the tech industry? Well, first of all, because our world is moving more and more to software-based business and communications and stuff like that. But also because of COVID, everyone has moved to remote business as much as possible. And so any business that's kind of thrives on that environment of people streaming or using, software or mobile business modalities are obviously boosting those users and stock values and revenue sources and things. And so that's the first thing. But then secondly, in an unstable economy, everyone's looking for the place where their money is least likely to disappear, right? So then you become willing to buy stocks at a kind of an unfair price, just to get your money in the safest place. So typically people are trying to look for a bargain, right? If the basics of the stock market is like buy low, sell high, right? Well, in an unstable economy, you're trying to figure out like, is this industry just going to disappear? And if so, if there's a chance of that, I need to get my money out of that. But where do I put it? So you look for industries that will thrive in the environment that we're facing. So that's the second reason. So we have businesses that are actually thriving because of COVID, others that are maybe not thriving, but they're still like a more secure place to have your money. And so people are paying sort of what we would say an unfair price for a good stock, basically. And that caused us to have a massive peak in those stock prices. Well, then you hear the news of like we're on pace to have more debt than income this year as a nation. Like our debt has exceeded our GDP, I think, for the year. I may be quoting that wrong, but I saw a news thing about that. And of course that shakes everyone, scares them, right? Here comes the Great Depressions. We're in 1929, it's all going down, right? Which we do have a lot of indicators that are very similar to that time. In fact, Ray Dalio says we're already in like a depression, not a recession. If you've watched Ray Dalio's videos, his economic machine or whatever, we have a recession every 3 to 5 years, and that's more of like a spending cycle. That's like a debt to income ratio for like individuals and businesses, where like if you take money today that means you're allowed to spend more than you earn. But at some point in the future, you have to spend less than you earn to pay back all the money, right? So hopefully that's going into business and you're getting new business, and therefore you have the ability to pay your debts back without, it being just a flat line, like you borrowed, so you have to pay. Hopefully it's tilted. You borrowed, so now you have to pay, but you're still going up, right? So that's a recession cycle every 3 to 5 years. There's like a 50 to 75 year cycle as well that we have consistently followed. And that one is like depression type cycle. So the last one was the Great Depression of the late 1920s. And here we are again, diving into that. How we approach it is very important. And, when things like COVID or other conflicts that may arise because of COVID could send us down into a really dark path. If we do it well and we don't have crazy natural disasters that keep ruining everything, maybe we can deleverage in a good way, and people can slowly tighten the belt over time, and we'll deleverage, we'll get our finances back right, whatever. But if we don't, essentially we get to a place where you have to rearrange debt. And that's probably where we're headed. I mean, that's just my guess. It's my own personal opinion. But when the gap between the haves and the have-nots gets too big, the have-nots can't pay their debts that they owe to the wealthy, to the financial industries, to everybody, right? And if you can't pay for too long and it gets too big, it becomes sort of this like hopeless battle, right? And you have to file for bankruptcy or whatever. And if you have like mass bankruptcies going on, basically the best thing you can do is rearrange debt. Just take the debt that exists, cut that, and say, okay, give me like a tenth of it and we'll call it good. So now the people that lent the money don't get their money. The people that borrowed the money don't have to pay their money, but there's a sort of a reset. So it's a really difficult thing to go through because that happens at every level, from individual to national and global levels. And that causes a lot of tension and chaos and instability in every market. It doesn't just happen it doesn't just affect like the travel industry, it affects everything. And so we're in this really weird place right now, but if we kind of go back to my original idea, what I was originally talking about is that in any given year, you can expect a recession in the stock market. Well, we just experienced it. Go watch my video, Stock Market Basics, and it'll explain some of these things to you. But I just thought it was funny that I literally recorded that like last week, and then this week, stock market tanks. So anyway, thanks for watching. We'll catch you next time.